So good morning, everyone. Thanks for attending. And here are our inaugural episode of Sertis Innovation Compass. We will give a few more minutes for people to join. So if you wait patiently, maybe another 60 seconds, we'll go ahead and get started. Thank you. Okay, I'm told we now have about 60 people online and joining, and I'm sure we'll pick up a few as we go. But in the interest of time, why don't we go ahead and get started? So thanks everyone for joining us today. The inaugural episode of Sertis Innovation Compass. We've chosen the financial services sector to talk about AI and data opportunities and give an overview of the landscape both in Thailand and more broadly into the region, perhaps even with participation of Andersen Consulting executives. We may have an opportunity to have a more global view of what the banking and financial services sector is doing in AI and financial services. So why don't we go ahead and check the next slide. So just a quick about the webinar. Innovation Compass is Sertis's webinar-based thought leadership forum. It's been developed to bring together business leaders interested in AI, data, and broader digital transformation topics by framing common challenges across verticals and markets. The series is designed for C-level executives and AI digital transformation leaders and IT and cloud strategy decision makers. You'll find as we go forward, we'll choose every couple of months, we'll choose a vertical and a topic of interest and bring together a panel that is globally expert at addressing some of the AI and data challenges, issues, and opportunities that we find in the sector. So a quick plug about Sertis, in case you didn't know. Sertis has over a decade of success as the region's largest and oldest AI and data professional services firm and consultancy. Some in the company may like to refer to us as an engineering firm. Some refer to us as a management consulting firm. We're a nice hybrid blend between both. 400 plus AI and data deployments over that time, including 2 joint ventures, one of which with PTT Group, 2 spin-offs, one of which where we develop trading algorithms for hedge funds, leveraging into our roots in data science and engineering. And our computer vision is globally top 20 ranked by NIST. As the moderator of the panel, well, a very nice and perhaps slightly airbrushed photo of myself there. Marketing team did a great job on that. I'm actually surprised and pleasantly so. So now I'm in a really super good mood. But my background, I've had 20 years in digital strategy, BD, and partnerships with leading brands such as Amazon and Singtel, both in Japan, the US, and throughout the region. And I currently serve as the Chief Commercial Officer at Sertis. So let's take an opportunity to take a moment and meet our panel. We're super happy to have this esteemed group with us today to talk about banking and financial services and AI opportunities. So I'm going to read a little bit from this. So if my eyes venture downwards, you'll know why. First, I'd like to introduce Dr. Puktada Triratpratuk. He is the Director of Payment Systems and Financial Technology Policy at the Department at the Bank of Thailand. Quite a senior role, and I'm sure many of you will be quite familiar with his name. Dr. Puktada brings extensive experience in AI research, having served on the advisory subcommittee for Thailand's National AI Development Plan starting back in 2020 and certainly throughout. Prior to his current role, he held several key positions at the Bank of Thailand, including Deputy Director of Data Analytics and Head of Research, before being appointed to lead the nation's policy efforts in payment systems and fintech. So thank you for joining us today. We're really, really happy to have you here. Next, we're also joined by Jason Strimpel, who is the Managing Director of AI and Advanced Analytics at Andersen Consulting. Jason brings a strong technical background and deep leadership experience, having served as the global head of engineering for data science and analytics at the firm. In 2022, he was with AWS, where he led Gen AI sales operations, helping to drive AI adoption across industries and making AWS the leading shareholder globally in the space. Next, please welcome Paul Adams, Managing Director and Partner at Andersen Consulting. Paul brings over 2 decades of global experience in corporate strategy, having held senior management roles across leading international strategy, consulting and corporate finance firms, a New York Stock Exchange listed group company, and is globally recognized expert for the last several years in the financial services space, and is particularly an expert at the concept of, which I hope he shares a little bit with us today, on artificial intelligence being actually a form of intangible asset. So we're super happy to have Paul here with us today. And last but certainly not least, and I'm flipping my paper here, so I'm reading a little bit rather than doing this extemporaneously. Last but not least, please welcome Michael Araneda, who's AWS Financial Services Lead for the ASEAN Marketplace. Paul brings deep expertise in financial services innovation across the Asia-Pacific region. Prior to joining AWS, he led research and consulting at IDC Financial Insights, where he covered both traditional financial institutions and emerging fintech startups. He closely tracks high-impact IT investment trends in the sector with a focus on digital transformation across banking and insurance. A frequent keynote speaker, Michael is widely recognized for his insights on Asian banking trends and best practices in financial services innovation. So welcome to the panel, and thank you again for being here with us today. I like to generally start out with a grounding slide in these sorts of panel discussions. I think it helps set the tone and lends a little bit of factual background for the audience. So our research and marketing team came up with this slide. Sources the Bank of England. So I guess what we see here in terms of data is representative of what's happening in England. But as Lord Acton famously advised us, what does he know of England who only England knows? So hopefully we can dissect this a little bit and lean into the topic. And I think what I gather from looking at this is current AI use cases in banking quite still are leaning into what has been the last few years the case: optimization of internal processes, fraud detection, cybersecurity. But I think what we see maybe one layer deep, if we peel the first layer of the onion away, we see a bit of a shift in the spend. So while sort of optimization of internal processes, fraud detection, cybersecurity still lead the spending, we're seeing some change in the spend in the mix. So a lot more seems to be going towards customer-facing activities. So finding trends, I guess through data science and ML techniques, finding trends that enable better customization of or presentation or personalization of services. We certainly see greater investment or lean in towards chatbots and customer services. And certainly, I think also we see some change in spend towards compliance. So using AI and data and compliance and legal compliance related activities. So let's use that as a lean into the first question. Let's start out with you, Dr. Puktada. What would you say? That's a view of England, but how about Thailand? What are the major AI and data projects and impacts being seen in financial services and banking this year? And how do you see that working in the next several years?
Okay, that's a good question. Actually, we sort of talk a lot with Bank of England, and then we actually see their initiative on like this surveying the financial landscape on regarding AI. And we actually did also in similar survey with bank and non-bank and every service provider that under our regulation of Bank of Thailand. So we did similar things last year. We are process of writing the write-up of the result, and to be honest, it's like similar. So we also in our survey make a distinction of traditional AI and generative AI, just to see the trend. But just overall, the trend is similar to England, that a lot of the focus that the bank is using now is all this internal optimization and automation, like a cost, the bottom line sort of thing. They do start to, and cybersecurity and fraud. And fraud is definitely, and cybersecurity is a big thing in Thailand that banks are focusing their AI efforts on. Customer support and customer facing is coming up with, naturally with Gen AI. But I think banks are still cautious of using it fully to interact with customers. So they might use like Gen AI to do the natural language understanding of what the customer, like for instance, chatbot. But in terms of talking to the customer directly, there might be like a rule based, or it's like more conservative, so that they control the risk. And that partly is also might be because of our current regulation from Bank of Thailand. But similar approach or use case. So maybe I just leave it here. So, but if you have more questions, then you can.
Sure. Yeah. Why don't we turn to you, Michael, for a more regional view? How are you seeing that activity play out in the financial services sector outside of Thailand, but more broadly in the ASEAN region?
Sure. Yeah, I think the story here is that there's a profusion of use cases exemplified by this set of use cases coming from sample size, but the sample of I think like UK-based institutions anyway, right? But I think this follows the same story and the trajectory of growth into AI use cases across the world, including Thailand, of course. The first thing is that in 2023, there was this supposed era of use case proliferation, right? Everyone was looking at all of these investigation into all of these use cases that are made possible by AI. But very quickly, the industry moved on to an investigation into which use cases are worth investing in, and ultimately what are going to be the use cases that are brought into production. And that happened very quickly. And I think in 2025 now, we are really looking at the productionizing of these use cases that was part of the proliferation of use cases for quite some time already. The use cases that we are currently seeing, not only in Thailand, but also across the region, can be bucketed into like three categories. First, of course, improvement of a customer experience. And then I think there's also the second bucket, which is all this AI assistant, especially useful in the coding assistant, especially as many of our developers are really modernizing the applications that build and support financial services. And then the third bucket, I think, which lends itself to this generative AI, but also agentic AI movement, is the improvement of business processes. That's a very broad category, but I think especially as we bring this to Thailand, these are the workflows, but also the business processes that matter for the country or customers in that country. Dr. Paktada already spoke about what are the big themes that are happening in the market. Of course, fraud is one of the key themes that AI seems to be addressing as well. It's not happening in Thailand only, but it's happening in the rest of the world as well. The changing frequency, but also tactics and techniques that shape the fraud problems that we really have to address as financial institutions. Just that example alone, AI is very useful in reducing a long-standing issue in fraud management, which is that our fraud analysts are struggling through dwell time problems that take them a lot of time to really identify what is a fraud alert that is worth looking into. How do you triage this fraud alert so that you can react and respond very quickly and then mitigate that problem as well. This is, I think, a business process, part of the third bucket of categories that we talked about earlier in the use cases in banking, where AI is making a lot of impact, aside from cybersecurity and also the optimization of internal processes for application build. So a lot of opportunities. We're way past that proliferation of use cases. We're bringing them to production. It's a very exciting times.
Well, great. That's a great answer and quite detailed. So thank you to both of you. But Michael, I want to pin you down a little bit. So because I think the answer was quite sprawling as much as it was in depth. But I'm quite interested to know, would you characterize banks' view? Are they more interested, if you had to stack rank it, are they more interested in using AI for top line issues, for process improvement, cost control, or more for compliance, which actually fraud detection might become more of an element of compliance? So how is the interest stack ranked among sort of those three top line categories?
Right. Yeah. So I don't know where to stack rank. The ultimate criteria is that the project needs to be able to make an impact, right? Whether it's impact in terms of cost, whether it's impact in terms of revenue, or the very important category of making sure that it improves the customer experience. But there are different permutations and also different criteria that a bank would be using in order for them to prioritize this list of use cases that they are proposing, right? But ultimately, it is about where it is making a lot of impact. But I think that ultimately the bank will make a decision about AI that will be able to resolve current issues in the organization. The most current one, I think that's happening in Thailand and the rest of the region, is fraud management. Can we use AI to resolve this particular current, but also quickly changing set of trends in fraud and financial crime? But secondly, the theme that I think ultimately we are driving towards is, can AI finally resolve these long-standing issues in our industry, right? And long-standing issues would include in our inability to respond to fraud very quickly. Also, this ability for us to bring down our conversations down to this customer segment of one. The customer segment of one is also where I think there is a convergence of all of these stack ranked criteria, right? Because it has business impact, cost to serve impact, and also business process impact as well. This long-standing issue of trying to identify this customer segment of one, bring down our customer segmentation, I think is somewhere in the middle of your ranking here. Being able to bring down customer segments down to this n equals 1, and then be able to have this meaningful conversations with the customer, right tone, right messaging, right time, right approach. That, I think, is where everyone is driving towards, right? This one-on-one, personalized, hyper-personalized conversations that bring together that criteria that you mentioned, Randy, improving cost metrics, basically improving cost to serve. Secondly, being able to have business revenue implications, if you can do cross-sell and upsell better because you're able to speak to a customer segment of one, and then being able to improve business processes as you deal with this n equals 1 customer.
Great, Michael. Brilliant answer and very clear. And talking about impact and looking at how you get to that sort of that detailed customer conversation where n equals 1, hyper-personalization, solving some of the pain points around fraud and fraudulent transactions, deepening fixing or addressing certain longstanding problems, those areas of impact. And I like the word impact. But let's look at the other side of impact, not simply on the customer side, but let's talk about the ROI. Let's talk about how investment decisions are made. And maybe we can turn to Paul to maybe get some insight on how do banks and financial institutions really look at addressing impact from an ROI standpoint? And do you see maybe some, with your view more broadly in Europe, North America, Asia, do you see some regional differences in how financial services institutions view that investment decision in ROI?
Yeah, it's a good question, Randy. And I'll answer it in sort of two different ways. I think the traditional way that it depends whether or not you're talking ultimately about how do they view ROI, how do they measure ROI, because they're actually two different things. So when we're talking about viewing ROI, I think it's reflected in a lot of the answers we've already had, in the sense of banks are looking at these business cases and AI and investments in AI through lenses like cost reduction, which is spoken about, revenue growth. Can we grow revenue with it? What is risk management and resilience? Things like fraud detection, etc. are the three key buckets that I've typically seen that the way that they look at it and say, okay, are we going to generate a return on investment by doing these, undertaking these activities? Are we going to solve for one of problems that fit into one of those three buckets, right? That's from the perspective of viewing it. There's another question, however, is can they measure it? And that is a much, much more challenging question, because measuring that from an ROI perspective requires that you actually be able to understand what have we spent on this process and then what have we gotten out of it. And, a particular bugbear of mine that I talk to companies a lot about is that the way that financial standards look at investments in AI, a lot of them are expensed away. So a lot of that expenditure ends up being expensed away. It never touches the balance sheet. It goes out through expenditure on R&D, etc. And that makes it actually quite hard to actually generate effective return on investment calculations for a variety of different reasons. And one of the things I talk about a lot with customers is that when you're investing in AI, you're actually creating very valuable intangible assets, right? You're making investments in software, you're making investments in data, processes, systems, a whole lot of other things. And typically those things don't ever appear on your balance sheet. They aren't, in fact, captured within the financial statements at all. And that makes it much more complex for not only banks, but really any institution investing in AI to actually make accurate calculations around return on investment. And that's a real challenge right across the world. That's not just a Southeast Asian thing. That is right across the world. You're finding organizations that are investing in AI know that they need to do it. They know that the time is now, that they need to go ahead and do that. They know that there are benefits to doing so. But what you find in practically at a financial level, they struggle to actually be able to calculate, well, we spent this much money, what are we actually getting in return? And that has nothing to do necessarily with AI and everything to do actually with the way the financial standards treat investments in intangible assets and investments in AI and other activities like that that generate intangible assets. And one of the things, just to round this out, that I talk about a lot is this notion that, what do you feed into an AI engine is intangible assets. You feed into it things like data and software and know-how and systems and processes and content. And the thing you get out of it is intangible assets as well. So the same things, data, software, improvements in systems and processes, etc. And so one of the things about understanding return on investment in AI is you need to understand both sides of that equation. What am I feeding into that AI? What am I getting out of it? And am I generating a positive return on investment through that? And currently, the existing financial standards actually make that quite hard to measure. So long answer to what should have been a simple question is not as simple as one would think of, oh, I've spent this much and I got this much back. It's actually a lot more complex than that.
Got it. It's quite an interesting thesis. Let me ask one quick follow-up question on that. So if the ROI calculation looks not only at, let's say, the specific project metrics that you're moving and a simple calculation, let's say in a cost savings environment of, what do I save, which is really a simple P&L calculation, and banks are generally good at it. It sounds like enterprise value itself can be impacted by even a dollar of investment in an AI solution. Is that in fact accurate, that enterprise value is increased by some geometric way when a company invests in an AI solution? And how sort of do you advise, or how do you see companies that may not recognize that? What are the ways to get started to build that mindset in an organization?
Yeah, I mean, fundamentally, you're right, though it's not always guaranteed, right? Like if it was guaranteed that you spent $1 on AI and you'd get a 10% a $10 bump in your enterprise value, that would be a wonderful universe for us all. And we know that there's a lot of these projects that are implemented that don't actually work, right? But in general, what we find is the following: when you say implement $100 million project in AI, most of that $100 million is going to end up showing as an expense in the P&L and is going to act as a drag on earnings from a financial statement perspective. Yes, there'll be a little bit that'll be capitalized, but the majority of it's going to be expensed away. So
Right.
on the face of it, it's going to show as a drag on earnings. Now, ultimately, we would expect that project to generate some kind of positive impact on cash flow and earnings into the future, but it's not always going to be apparent. And or it may happen quite a number of quarters, etc., down the road. But the reality is, when you've spent that money, you've actually built valuable assets, right? You've improved the software of the firm, you've improved the structure of the operations, the systems, the processes, you've added value to data. And actually, what you're doing is you are building enterprise value. And so, one of the challenges that I think banks and financial institutions face is that when they're talking to both internal and external stakeholders, is outside the realms of a specific project, which you correctly identify, you can say, well, we spent this much, we got this much back. In the broader context of it, at an enterprise level, you have to have discussions with your stakeholders, internal and external, about, listen, we're making these investments. It's going to show as a drag on earnings in the immediate, but actually we're going to get a significant payoff in the longer term because we're actually building valuable assets, and that is building enterprise value. And if a bank made a decision, for example, listen, we are simply not going to invest in AI at all, full stop, end of story, because that's going to mean we're not spending as much, so therefore we're going to be worth more. Everybody would look at that and say, that's crazy. You have to modernize your bank. You have to adopt this technology. And that's essentially the decision banks are making. We're going to make this investment. It's going to show as a drag on earnings in the short term, but it's going to actually end up building the strategic asset base of the company over the longer term.
Excellent. Brilliant insight. So now that we've heard a little bit about impact, what is interesting to the banks from a business perspective, what they're engaged in both in Thailand and regionally, and a bit from Paul on the ROI equation and AI investment as an intangible asset. Jason, let's turn to you. Have not meant to orphan you in the conversation to this point, so let me ask something that leans into your expertise on the engineering and nuts and bolts of data and AI. So given what we've learned that banks are interested in making impact, what are some of the actual approaches or tools that in AI and data that we see financial services institutions adopting towards their interest in making impact?
Yeah, great question. I think it partially depends on how you want to define AI. And I think AI is tough because AI kind of means everything and nothing all at the same time. So the way we think about AI at Andersen is a bit of a maturity curve where to do anything, you need data. And you've got, our AWS colleague here who has some of the best data integration and storage kit you can possibly imagine. And this matters. And I think what modern AI or agentic AI or generative AI, which is what most people think nowadays when you say AI, what it's allowing folks to do is unlock data that was previously locked up. So for example, structured data in rows and columns in a database, that's relatively easy to do analytics with. And when we talk about AI, before 2022, AI was actually machine learning. So how do you cohort a customer, get to that customer of one, N of one? Or how do you do the fraud detection on a graph database, right? How do you determine the networks and the nodes between people doing different things? And a lot of people would consider this AI, but maybe like be a little apprehensive to call it AI because it really wasn't artificial intelligence. It was more machine learning, right? Predictive modelings. That stuff is still super relevant. And I think if you think about this as a maturity curve where you have data and then predictive analytics and then maybe agentic and generative AI, a lot of companies are still at this base foundation of getting their data infrastructure correct. So I would posit a lot of organizations would benefit from taking a look at their data infrastructure and asking the hard question, are we getting economies of scale with our data infrastructure, or are we getting diseconomies of scale with our data infrastructure? Do I have to spend this massive OpEx every year just to maintain this database, and I'm just maintaining it, not doing anything with it? As soon as you start to layer in predictive analytics and start to go up the stack of generative AI and agentic, then you start to really exploit the data and you really derive economies of scale. And that's not even talking about unstructured data. So documents, PDF scans, all sorts of different languages. This kind of gets back to the fraud conversation we've heard quite a bit. Natural language, all of this stuff starts to become in scope for these applications.
Great. Thanks for that insight, Jason. Quite interesting. Let's move, since we've talked about sort of the enterprise level of business decisions around impact in the organization. A little bit about how ROI is thought of as impact is maybe prioritized, what to do first, what to do last, and a little bit about the tools that underpin it. Let's move and just ask a quick question. Maybe Dr. Paktada can give some insight. How does the customer themselves interface with banks in terms of their expectations for services, their expectation for the interaction model? Are we seeing that banks are being responsive to that and understand it? How is the customer's view of advanced services and advanced technology impacting how banks and financial institutions are adopting new services or AI in general?
Interesting. My answer would be, well, I think at least I can speak on maybe Thailand context. So
Okay.
customers still, I think definitely are more accustomed to, more acceptable to AI, interacting with AI agent. But at least for now, I think for financial sectors with our compliance and regulation as a central bank, we still have them be very cautious. So in terms of what the customization driving the AI out of financial sectors in Thailand, I don't think it's as important. I mean, that's my personal view. I think it's more driving from the bank themselves, right? And then maybe partially from the regulation side, from the government sector side, we're pushing them to do fraud monitoring. So and then we have a Sertis law that we are passing out, so we are pushing pressure on them to do fraud, and then they also want to do fraud. So it's more driving from the business part more than like the customer demanding. But I think as the technology mature and also customer knowledge and awareness of what AI is mature, I think that would become more of a factor in terms of driving the use case and adoption. So that'd be my take.
Great. Thank you for that insight. Before we get to Q&A, as the digital hook is beginning to appear, lurking here to my left side, I do want to ask maybe one last question, and maybe this is a good one for Michael, given your regional view and working with a hyperscaler both at the sales level and also at the tool level. But maybe the right way to ask the question is where is AI heading in financial services, and sort of where human judgment is still indispensable? How do we find the balance between technical capability, human judgment, human capability, and how do those get reconciled from the financial services perspective?
Right. Yeah. So
I saved the hardest question for last.
Very good. It's almost a philosophical question, but happy to take this. But the key thing that we also want to highlight as we're talking about impact is that there's also the positive impact of AI, right? But there's also the negative, adverse impact that we really have to watch out for too. And I think one of the ways by which we can really consider if AI is really useful for the customer is that it does not do any harm to the customer as well. And so as we think about this AI phenomenon that is undertaken across, that is being undertaken across different banks in the industry, we really want to talk about how there are guardrails that are put in place to make sure that data governance is there, but also the right use of AI tools and techniques to make sure that it does not do harm for the customer. So guardrails is featured into the approach of AWS as we also pursue the opportunities around that of AI. But also we want to take a look at the involvement of humans. Maybe they're part of the mitigation set of tools that we have to make sure that they do not do harm to the customer, right? Whether it's human in the loop to really look at autonomous decisions that need human judgment ultimately, right? While AI can solve the scale problems of decisions that need to be done almost instantaneously, the human in the loop will be able to make sure that as we make more autonomous decisions through AI, that the customer is ultimately not harmed. And so there is a role for AI to work better for the benefit of the customers, but also be helped by humans as well.
Great, thank you. Thank you for that insightful answer. I think that's what everyone was hoping to hear with the question. So thank you
May I jump in?
for validating that. Yeah, please, Dr. Bhaktada, please.
Oh yes. Because like I think for that last question from I just want to as a regulators, right? So I want to jump in a little bit. In terms of human judgment, so I think like the approach of at least from financial sectors, from Bank of Thailand point of view, I think we are closer more to like Singapore or Hong Kong to like compared to let's say EU, for example. So it's like very so responsible and ethic and all those things. I think we are very open to try to be at least for the context of us for Thailand, like very encouraging the adoption of AI. When your question regarding the human judgment, I think so analyze internally now we are trying to look at classify AI based on the use case. So it's strategic, important, and sort of like, if it's internal process and the bank want to use it, we are not really have any problem with it. But then there's certain class of use case that we specific and then try identify, and then that will be communicate to the bank or like financial service provider and under regulation. That's in those particular use case. For other use case like automation, we are encouraged, but there's sort of like a narrow specific use case that we might not comfortable, and we would love for the initial adoption to have some sort of human judgment in the loop, and those were sort of like a very narrow, right? And another thing that from our point of view is we do not want, at least for us right now, we could change my mind next year, but at least for now, I think we don't want it to be the case that let's say for credit score
Right.
or like all these things, we don't want to be like arbitrage of regulation, or at least like different. We don't want to treat the AI differently than like traditional credit scoring model, right? So we look at more like sort of identifying risk and then try to look past. Well, because we did have an internal discussion whether we're gonna do something especially for AI, and I think our decision is not that. So if it's like risk scoring for like giving our loan consideration, whatever we looked at, it shouldn't be tied to whether it's machine learning or Gen AI or traditional rule based or whatnot, right? So it's sort of in that, and I want to share like the view from BOT for Thailand context.
Thank you for that insight, and I think it's a great way to wrap up the panel portion before we get to Q&A. That AI as a tool is really a supplementary tool that enhances rather than replaces. And I think we're seeing that sort of as a perspective, even across, while different business cultures may have different approaches, that seems to be a common theme across most marketplaces where banks are rapidly adopting AI. So thanks again for that insight. I do see that there's a queue of questions, so I'm gonna grab a few in the time that we have. first question, and I will apologize in advance if I can't get to your questions because there are several that have been queued up here, but I'm going to grab a few that seem to be most relevant, maybe to the broader audience. So the first question is addressed to Paul specifically. How would you advise, from an operating perspective, maybe I have to paraphrase this a little bit, but how would you advise a company to work cross-functionally to achieve a meaningful arrive at an accurate calculation or concept of ROI?
Yeah, wow. If we've got another 7 or 8 hours, but we don't, so I'll do my best to answer it. I think that look, the way that we've done is we try to work with companies is to follow some basic principles, and the first is to recognize that most of these investments are going to show us expenses. And so, from a financial perspective, first of all, you've got to acknowledge they're not going to end up being well reflected in your financial statements. So we can't change the accounting standards, so we just have to accept that that's going to be the case. So then how do you figure out you've generated a positive return on investment? So one of the models that we have been using is by essentially saying, okay, let's say you've got a bunch of data and you apply AI to that data. That data is going to be, assuming you've done a good job of it, you asked Jason to come along and help you, and you got Amazon to do the work for you, etc., right? It's stored correctly, you've done all the things properly. That data is going to be worth more at the end of that process than it was at the beginning.
Right.
And you should therefore be able to theoretically measure that increase in value. Now, you can't put that on the balance sheet, but you can actually talk to internal and external stakeholders about saying, okay, well, we think that the data was worth 20 million to start with. We've applied this AI and we think now it's worth 80 million because of the benefits that it's generating. And some of those benefits may be measurable in terms of, for example, free cash flows, etc., over time, but some of them may not be. But in short, that you can measure that step up in value, and you can do that for a number of different kinds of intangible assets as well. So not just data, you could look at software, you could look at systems and processes, but that fundamentally, without us spending hours and hours and hours talking about it, is the way that you do it. And it reflects what I talked about before, is that notion is what do you feed into an AI engine is intangible assets. What do you get out of an AI engine is intangible assets. Knowing that, we can measure both sides of that equation, and we can see actually if you're creating asset value or if you are destroying it. And hopefully what we're doing is we're creating it. But that's the fundamental way you do it. Hopefully that has answered the question.
Great. Thank you, Paul.
If I can add, Randy, so the part on the cross-functional bit, I
Yep.
think you need to have a good process or framework to work backwards from the business outcome that you're trying to achieve, and not forget that this is just another tool to solve a new class of business problems that we couldn't solve before, but we're still applying a tool to a class of business problems. So if you have a good framework to work, Amazon's famous for working backwards. Clearly, Amazon is still close to my heart, but working backwards from the customer problem or what the customer is trying to achieve, you will naturally get into a position where you have the cross-functional stakeholders in the same room, which makes that conversation that Paul's describing much, much easier. So you kind of need to have the expertise of somebody like Paul, but plus you need to have the framework or the process to properly scope the use case that you're trying to implement.
Yeah, absolutely. And just to add one thing to that, you're quite right. And I should have spent a bit more time on the cross-functional component because that cross-functional component can go a lot of different places. So we talked a lot today about the customer. Now, if we can use AI to surprise and delight the customer, we've not only potentially increased the value of the data, we've probably increased the value of the brand, right? Because now we're actually driving better outcomes for the customer. The customer is happier, they're experiencing less fraud, etc. Fraud is resolved quicker, for example. Classic case of, yes, you're working with data and software, but what is one of the outcomes? Well, you've increased the value of the brand to the enterprise. So a classic case of a cross-functional output.
Great. That's that between both sides of the answer, I think you addressed the question quite well. Leaning in a little bit, there's a question that's related. The audience member mentions that they've worked through a few failures at the project level, fits and starts, I guess you could describe it as, within their bank. Maybe it's a question for Jason. What are the best practices to avoid failure at the project level when you deploy an AI project?
Yeah, wow. There's lots of failure modes, and I think some organizations have a really good culture of successfully delivering technology, some don't.
Mm.
And I think if you take a hard look at your organizational culture and you're like, wow, the last 10 years, 9 out of 10 of our CapEx projects have failed, there's nothing that should tell you that the 11th will succeed. Something has to change, right? But barring that, there's a couple big failure modes. Michael kind of touched on, well, I think we've touched on all of them, but getting out of the POC into production. So if your failure means that you get a POC and you never get it scaled past 5 users, one department, and into production, then that is a particular set of activities that you need to follow to kind of solve, right?
Yep.
If it's a cost and ROI thing, a lot of executives are reluctant to go all in because the cost of these things, like million tokens in, million tokens out, and others, there's thinking tokens and like the agentic thing is consuming all these tokens. So it's very difficult to come up with a cost estimate. And then, of course, the ROI we've talked a lot about. So working backwards with that in mind is a good way to address that. Obviously, we're talking about banking, highly regulated environment across the world. Um, Executives are worried about the safety, about the errors that these things make. These models are probabilistic. So you put the same question in ChatGPT twice or through your Bedrock API, you're going to get a different answer twice, right? Because these are probabilistic models. And then ultimately, the talent to actually implement this stuff, to get the people in the room that actually know how to do it. This is a plug for Mr. Randy here. This is a huge one and one that executives often worry about as well. So those four failure modes, if you think about those four failure modes up front and you try to address them first, what's the plan to get to production? How do I estimate cost and ROI? What's the safety implications? What's the regulatory implications of what I'm doing? And do I have the right partner? Do I have the right talent to actually push this thing into the world? Um, that's a good place to start, and probably table stakes or the necessary place to start even before you contemplate doing any tech project, especially artificial intelligence and some of the advanced stuff that we've been talking about.
Great. Thanks, Jason. We have time for one more question, and maybe I'm going to pick something that once again could be, it seems to be quite relevant, though could be a dissertation of sorts, but let's try to get it into a bite-sized nugget. Michael, the question from the audience was, how do you see agentic AI impacting the flow of investment of projects in banking and financial services?
Right. I think very good, timely, because everyone's talking about the agentic AI and the possibilities for agentic AI in banking. I'd say that the quick answer is that it accelerates all of these conversations around the value that we are going to bring to the customer as well, right? Because agentic, I think, will be able to address some of these long-standing issues that we've been trying to resolve for our industry, including, not to mention, how do you deal with this customer segment of one? If you can then be able to have this autonomous and reasoning type of agents that can collaborate to make sure that they extend financial services to the lifestyle of the customer or the intention of the customer, whether it's for booking a vacation or planning for retirement or facilitating a trip, for example. That is, I think, an extension of a long-standing issue of our industry, which is how do you deal with this customer segment of one, various quirks, various intentions, but also various preferences for the individual customer too. So agentic, I think, will help in facilitating this conversation around how do we extend the value of financial services. And speaking of Paul's value creation type of theory, this is where the value is created. And that also is going to be beneficial for both the customer as well as the bank.
Great, thanks for that. So we've come to the end of our hour for our first episode of Innovation Compass. We hope everyone in the audience has found something valuable and a takeaway from today's conversation. I'm told that we had a little north of 80 people actually on the session here today. Out of 120 registries, I don't know if that's a touchdown or a field goal. My marketing team will say it's a decisive touchdown. I might characterize it as a field goal, but out of the gate as a first shot, I'm sure it's a victory. So big special thanks also to our sponsor AWS. Maybe Michael, if you'd like to, you could take us out with a final statement for everyone on AI and financial services and banking.
Right. Yeah. So I think whatever we learned from this first, I think in a series of very good conversations, is that we need to all have a view of listening into all of these issues that matter to our industry, right? I think at AWS and Amazon, we're always talking about our ability to listen, to learn from each other, but also to learn and then be able to experiment based on those learnings. Also, from the AWS perspective, the AWS Thailand region has just been launched this year. I think that is also a good way to talk about our investments into the digitalization of the Thai market. And we're very pleased to have these conversations moving forward.
Great, thanks, Michael, and thanks to our panel for attending today. Some are it's late night for Jason. It's probably pretty early in the morning for Paul, and it's lunchtime for all of us here in Thailand. So thanks everyone for attending today, and we'll look forward to seeing you again at the next episode of Innovation Compass. And to note, if you would like to have any of your teammates or colleagues listen in, or if they were unable to attend today, the transcripts and video will be on YouTube probably within the next day or two. So feel free to, for eternal posterity's sake, having another look or encouraging your friends and colleagues to have a look at Innovation Compass as well. Thanks again for attending, and we'll look forward to seeing you all at the next session.
Thanks, Randy.
Thanks, Randy.
Yes.
Take care,
Bye.
guys. Bye.
Bye. Thank you.